Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 378 on June the 8th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on SoundHound AI, DraftKings, and C3 AI. And we discussed three new trades on Aurora Cannabis, Riot Platforms, and the VanEck Junior Gold Miners ETF. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit the website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. The stock market managed to pull off a second consecutive week of higher prices. The Dow Jones Industrial Average grew 492 points, closing the week at 42,762 points. The S&P 500 index picked up 88 points, ending the week at 6,000 points on Friday. And now it's time for the topic of the week. The topic of the week is building arks. Now, one of the things I love about the summertime is that everything slows down a bit in business. People start taking vacations, and life just seems to ease off the gas for a couple of months. It's a great time to analyze how the year is going and to make any adjustments that could lead to a successful year. Now, I heard the best quote earlier this week. Here it goes. Predicting rain does not matter. Building arks does. It's obviously a reference to Noah and the building of the ark. The message is both clear and profound if you think about it. Predicting rain does not matter. You can perfectly predict the direction of the economy or the stock market and not benefit 1 cent from being right. You have to build the ark. That means you have to take action in order to benefit from that correct prediction or analysis. Think about how many times you've looked at a trend in the market or even at a product idea that you were certain would be a hit. Most people are content to just be able to tell their friends that they were right. Being right doesn't pay any bills, unfortunately. Taking the action to profit from that prediction is the only way to benefit from being right. So you have to take action. I'm not telling you anything new. The truth of it is I'm actually reminding myself. I really do love being right. Just being right isn't enough though. You have to make the trade or execute the business plan or take whatever action is necessary to win. I want you all to win. So I might just put this quote on my wall, put it on a painting in the office. Predicting rain does not matter. Building arks does. So let's go ahead and get into the review of last week's trades. We're going to start off with our covered call on SoundHound AI, symbol S as in Sierra, O as in Oscar, U as in Uniform, N as in November. At the time, the stock was trading for $10.11 per share. I looked at buying stock and selling the June 10-half call at 68 cents, hoping for a return of 10.58% in 3 weeks. Well, shares of SoundHound AI finished the week unchanged, literally right at $10.11 per share. It always seems bizarre when that happens, but it does occasionally happen. The call option that we sold lost 18 cents, leaving us with a net profit of 18 cents if we were to close that trade out immediately. Now, with the stock unchanged and the call option that we sold losing value, this trade is actually working out. All of the economics from the original trade are still intact, so there's no need to make any adjustments on this one. We have 2 weeks from expiration, so you definitely want to keep an eye on the stock and have a plan ready just in case an adjustment is needed. Next up, we have the credit spread on DraftKings, Inc., symbol D as in Delta, K as in Kilo, N as in November, G as in Golf. At the time, the stock was trading for $35.88 per share. I looked at selling the June 35 put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Well, shares of DraftKings finished the week 7 cents lower, closing at $35.81 on Friday. Now, the out-of-the-money put spread that we sold is still out of the money, and at this point, the stock is still 47 cents above the break-even point. So no adjustments are needed on this trade either. I would have a plan ready. You can always change the spread from a credit spread to a debit spread. You can roll the spread to another strike or another month. You can create an iron condor by selling the call spread too. You have options if you need to make an adjustment over the next 2 weeks. At this point, no need to make any changes. We just want to make sure that the stock remains above $35.50 per share so that the spread that we sold expires out of the money, and then we get to keep the money that we collected for selling that spread. So far, so good. And then our final trade from last week was a debit spread on C3 AI, symbol A as in alpha, I as in India. At the time, the stock was trading for $26.59 per share. I looked at buying the June 26 half call spread for 30 cents. This could give us a maximum gain of 20 cents, or that's a 66.67% return on capital in 3 weeks. Now, shares of C3 AI lost 65 cents, ending the week at $25.94 per share. The in-the-money call spread that we bought is now out of the money. The stock price is below the break-even price, which means we are justified in making an adjustment. Now, a quick look at the stock chart, the price chart, makes me a little more hesitant to adjust this trade. I'm still bullish over the next couple of weeks and even longer on this stock. However, we could make some adjustments to lower the risk of loss. That could be turning the debit spread into a credit spread and then creating an iron condor by selling a lower put spread. That could also happen by rolling the debit spread into a further month, giving the stock more time to push higher. With 2 weeks left and a slightly higher trending stock price over the last couple of months, I'm actually leaning towards waiting a day or two just to see if the stock price is going to head higher again. If it does, great. I won't make an adjustment. If it does not, then I'll need to make an adjustment. Probably one of the ones that I mentioned above would help to protect me a bit. So that's it for the review of last week's trades. This is the last week that we'll use the June monthly options since we are only 2 weeks away from expiration. With the shortened time frame, that means that the trades on today's show are even more risky due to the lack of time to make adjustments. So all trades on today's show are going to use the June 20th expiration for monthly options in June. Let's dive in with the covered call. We're looking at Aurora Cannabis, symbol A as in alpha, C as in Charlie, B as in Bravo. The stock ended the week at $5.72 per share. I'm looking at buying that stock and selling the June 6 call at 35 cents. That could give us a return of 11% in 2 weeks. Now you enter this trade by buying stock for $5.72 per share and selling the June 6 call at 35 cents. This trade makes the most money if stock prices finish above $6 per share. The break-even price on this trade is $5.37 per share, and in real terms, the stock purchase will require $572, and you'll collect $35 for selling the option. Next up, we have a credit spread on Riot Platforms, symbol R as in Romeo, I as in India, O as in Oscar, T as in Tango. The stock ended the week at $9.85 per share. I'm looking at selling the June 9 put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. Now you enter this trade by selling the June 9 put at 40 cents and concurrently buying the June 9 put for 23 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $9.50 per share. The break-even price on this trade is $9.33 per share, and in real terms, you'll receive $17 per spread that you sell and have $33 at risk. And then our final trade is going to be a debit spread. I'm looking at the VanEck Junior Gold Miners ETF, symbol G as in Golf, D as in Delta, X as in X-ray, J as in Juliet. The stock ended the week at $69 per share. I'm looking at buying the June 68.69 call spread for 61 cents. That could give us a maximum gain of 39 cents, or that's a 63.93% return on capital in 2 weeks. Now you enter this trade by buying the June 68 call for $2.63 and concurrently selling the June 69 call at $2.02. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $69 per share. The break-even price on this trade is $68.61 per share. In real terms, you'll pay $61 to enter the spread, and your maximum gain is $39 per spread. So that's it for this week's show. Thank you guys so much for listening. Thank you for the questions you've asked via email. I love helping out. I love answering questions. Hey, if you need anything, feel free to reach out. Otherwise, tune in for next week's show as well. And I hope you have a wonderful weekend. As always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.